Good morning, everyone. Welcome back to Paycheck the Portfolio. Super excited this morning. We're going to talk about why I still live out of my brokerage account 1 year later. I started this YouTube channel in May of 2025. At that point, my portfolio was sitting at $118,431. Obviously, we're in May of 2026. Now my portfolio is sitting at $216,620. You can see the quote by Benjamin Franklin below. Money makes money, and the money that money makes money. It's a little bit of a tongue twister, but if you just stop and reflect on what he said, there's so much truth there. You know, in America, we're such a consumption culture. We go and buy new cars, we spend on credit cards for consumption and fun, and then we end up upside down because we're paying 10, 15, 20 plus percent sometimes on credit cards. And then we get stuck in this vicious cycle of having to trade time for money. And then it's a golden handcuff situation to where you're working for the rest of your life and you're stuck to your job. In the Paycheck to Portfolio system, all of my income goes into a brokerage account. I fully invest into long-term growth stocks and ETFs, closed-end funds, and high yield funds. And then what my dividends don't cover, I use my equity to pay my bills, which allows me to stay fully invested in compounding on the front end. We'll talk about that as we go here, but really this episode, if you will, is really a reflection of the last year. Gratitude for the community that's been built. I'm so thankful for everybody and for your support. Special thanks to my buddy David at church that talked me into starting this channel and was persistent. But let's jump into a portfolio update. Then we'll go step by step through some of your questions and reflections over the last year. Looking at the live portfolio this morning, you can see I'm sitting at $216,620 of net account value. My total unrealized gain, just equity gain, is sitting basically at $55,000 or almost 14%. Friday was a fairly flat day in the market. I was up about $500. Over the last 1 year on the historical values tab, again, clicking the 1 year here. Now, this goes back to June, I believe, on the E-Trade chart here. So we're missing a month if you go back to May, but this goes back to June. So June of last year, I was sitting at $118,431. You can see the ending value as of this morning was $216,765. You'll notice a little bit of a difference between this number and this number. That's because I'm fully living out of the brokerage account. I have an E-Trade debit card that's attached to the brokerage account that pulls from my equity when I buy groceries, when I go to the movies like we did last night. So this is a dynamic account. It's not stagnant. Most people, when they invest, they're investing for 30 years in their 401ks, and then hopefully they can retire and it's enough money to live off of. I flip that mentality. I'm fully invested on the front end. I allow my whole paycheck to go in, and then I borrow from the equity and the assets and the dividends. So I have a gross portfolio value, which is about $450,000. And then I have a net portfolio value, which is $216,000. Think of it like a piece of real estate, which I talk a lot about. One, I'm a real estate investor as well. But two, it's a very easy analogy for people to understand. It's like having a $500,000 house and you have a $250,000 mortgage. It's the same exact principle and concept. With a piece of real estate, you can borrow from your equity. You're paying down your mortgage. You're building growth over time. So you get all of those elements within your brokerage account. So over the last year, I'm up basically $100,000 there while fully living out of my account versus investing the leftovers or going to the bank and then letting the bank lend your money out to somebody else. I'm choosing to be my own bank essentially within the brokerage account, which has allowed me to have robust growth, which can expedite my compounding curve and set me free from a 9-to-5 job much quicker. If you look over the last 2 years, the portfolio is up almost $130,000 there. So pretty amazing when you think about it. In the Paycheck the Portfolio system, you get velocity banking concepts, except you're not paying down debts. You're building equity and assets that compound on themselves and generate cash flow. So try not to overcomplicate this. Sometimes folks can go off into the weeds with, what if the market crashes? Well, if the market crashes, one, stocks are going to be cheaper to buy, and I have a paycheck coming in every 2 weeks. But on top of that, I use put options as insurance to insure my portfolio against a market correction or a market crash. Just because my house could burn down, and thank God it hasn't, doesn't mean I don't buy a house. It means I take protections. I have smoke alarms in my house. I have homeowners insurance policy on my home. The portfolio is the same way, and I would encourage you to stop making excuses for why it won't work and to try to change your mindset out of the consumer mindset and into a business ownership mindset. But absolutely educate yourself before you jump into the deep end of the pool. I have a starter series called Spark to Fire if you want to check that out, which is for my 17-year-old daughter who's about ready to go off to college, where I started an account for her from scratch and scaling into the system. But pretty amazing when you think about it that I'm living out of the brokerage account. All of my bills are getting paid, and my net portfolio value is up almost $130,000 in 2 years. Looking at the 2-year performance, you can see I'm sitting at 61% time weighted return. This includes equity growth and dividends received. This only includes equity growth, no trailing dividends or forward-looking dividends. However, time weighted return does capture that. So 61%, the S&P 500's at 42, the Nasdaq's at 58, the Dow's at 29.5, and the Russell's at 40.5% there. Looking at the estimated income tab, over the next 1 year, I'm projected to receive about $51,000 of dividends. So what the equity growth does, will add an equity foundation layer, and then the dividends will come in and layer on top of that like icing on the cake. Looking at the 1 month, you can see I'm projected to bring in about $4,000 of dividends. What E-Trade does is they take the last distribution and they annualize that out over the next 12 months. So some months this is going to be higher, some months this is going to be lower. I average between $3,500 and $5,000 a month in dividends, depending on how much the covered call funds pay out, such as QQQI, SPYI, WiMAX, and others. So I don't get too caught up in this. It is a good calculator if you're looking to see how much projected income you're going to bring in. Let's jump back into the Excel file and we'll go through that step by step this morning. Okay, I wanted to do a side-by-side comparison of my gross portfolio value and my net portfolio value over the last year since I started the YouTube channel in May of 2025. I get questions about this sometimes, so I'm going to do my best to simplify it. The gross portfolio value is the full machine, everything working, everything producing. This would have been consumed otherwise, right? When your paycheck comes in now, if you're not living the paycheck to portfolio method, you're buying groceries, you're buying trips, you're paying your mortgage. Those things are being consumed. That money, rather, is being consumed, and then it's gone, right? In the paycheck to portfolio system, all of this income buys assets. So you still have something that you own, and then you have your net portfolio value, which is your true ownership after liabilities, just like the real estate analogy I gave earlier. So gross portfolio value, again, is the full machine working, everything working, and how your assets are actually doing with a full investment. Net portfolio value is what I own after liabilities, just like that $500,000 house analogy and $250,000 mortgage. So when I started recording back in May of 2025, my gross portfolio was $220,000 and my net portfolio value was $118,000 at that point. Now you can see I'm sitting at $447,000 of gross portfolio value, and my net portfolio value is $216,000, almost $217,000. The change over that time is $227,000 of gross portfolio value change and almost $100,000 of net portfolio value change. So all of my money comes in, I fully invest it, And then as the market grows and dividends layer in, the system keeps compounding on itself. And over that time, we've had market pullbacks. Previously, the month before I started in May, we had the April tariff situation. I've been through market corrections and market crashes. You have to be wise with how you invest. You have to keep put options on at all times, and you have to be able to stomach volatility. It is not a straight upward trajectory. Some months are going to be higher, some months are going to be lower. There's going to be months you're up 7, 10%, and you think everything's phenomenal, like right now. And then there's going to be months in like April with the tariff situation to where you're going to be, oh my gosh, this is scary. So, that's why I recommend scaling into the system, but make sure you understand how you treat your portfolio like a business versus just an investment account. And that's really the difference in the paycheck to portfolio system. So think of it this way: the paycheck comes in, goes into the brokerage account. I buy assets, and some of those assets generate cash flow. What the cash flow doesn't cover, I pay my bills with margin. And then I reinvest and it creates more growth, just like that Benjamin Franklin comment that we read at the beginning of the video. So let's jump into the system step by step here. Okay, looking at the paycheck to portfolio system step by step, I'm very visual, which is why I teach visually. And I hope that this image helps kind of paint the picture for you. So my W 2 income comes in. As I mentioned, it goes straight into the brokerage account. I invest into those three buckets: growth stocks, closed end funds, and high yield funds. Those generate dividends and cash flow. What my dividends don't cover, I pay with margin. And then it keeps me fully invested in compounding. And I just repeat that cycle over and over and over again with my W 2 income. I bring in about $132,000 a year of net income. I have a wholesale real estate business that I do pretty well with. And any income that I bring in goes through the motions here, which will expedite my compounding curve, as you've seen with my actual numbers and my actual portfolio, which is outperforming the indexes, and allow me to break free from corporate American 5 to 7 years versus 30 years. That's how the system works. And I really hope that this visualization has helped you understand the system. And if you have any questions, you can jump into our membership Discord and community. All of my resources are under the pinned comments and all of my videos if you want to check that out in more detail. Let's jump into some of your questions and some of the things I've learned over the last year. Okay, every week I put out a survey just because I really enjoy the community engagement, and it gives me an opportunity to almost sit down with you and talk through things, which I really love. So I appreciate the engagement and the feedback. I said, crazy to say this, but this marks the first full year on YouTube, and I'm revisiting how it all started, why I live out of my brokerage account, my fire strategy. You can go watch that initial video and check that out if you would like. Folks wanted to talk about building equity and net worth. Hopefully, I covered that topic for you. Creating monthly cash flow. I talked through the overview of how I do that. Using margin responsibly. What I would say on that one is, I don't view margin as a conduit to just buying a whole bunch of extra equities and then strapping myself. I use margin to live off of and to fully invest my paycheck, which gives me that compounding curve much quicker. One of the mistakes I've seen over the last year, especially in my community, is folks will have maybe 90% equity and they go buy another 30% of assets, and then if we have a big pullback, it can negatively impact their equity, and then they're in a bind. So, that's why I really teach scaling in. And then other members I have, which I'll talk about here as well, they tend to be a little bit more conservative, scale in, have really good diversification with indexed names at the top of their portfolios, and more single stock or single ticker names at the lower end or the bottom end of their portfolio, which I think is wise because diversification will always help. And dollar cost averaging will be your friend over time. And we talk about that on the videos, buying at the highs, buying at the lows, buying at the averages, just smooths out that volatility curve as you are invested. And the longer you're invested, the less likely you are to lose money. That's just a proven fact if you go look at the stock market over the last several years. For example, QQQ or the Nasdaq's in the high 600 range now. 1 year ago, it was in the high 400 range. So, the market over time is going to grow just simply due to inflation in and of itself. But on top of that, the economy is still growing at 2% plus growth. Inflation's still moving. So these companies are going to grow just due to the simple fact that inflation. And the longer you're in the game, the more likely you are to make money. Looking at some of the questions and comments, Applejack, she's a part of our community and has been following me a while. She says, 1 year, congratulations, and thank you for your consistency. That has taught me more than you know. Really appreciate that. Your support and everybody's support has been humbling for me. I'm grateful for you, and I appreciate your comments and kind words. It took me a few months to fully wrap my head around the system. If you've noticed, I kind of say some of the same things over and over again. I'm not doing that for any other reason than to help people learn because we have to hear things a few times, quite frankly, multiple times before it clicks. But watching the portfolio grow and seeing the income come in is truly life changing. I'm grateful every day that YouTube decided I needed to watch your videos. Yeah, thank God for that algorithm, right? I wish it would expand even more because I really do believe it can be life changing if you know what you're doing and that the knowledge is really powerful in that situation. The key that you're doing that most people don't do is they actually take action. The key to being successful in my experience, whether it's work, whether it's investments, whether it's business, and I have a background in private equity, it's taking action, right? It's usually not knowledge, it's usually not degrees at all. I've met a lot of uh, non-street smart doctorate degrees and non-street smart master's degrees. Trust me, the key is taking action, being consistent, and executing. If you can get your head and your heart to move in that direction, you're going to do just fine. What you have, as you've been following along, and I know we've been talking in the community at times. Creedy says, happy first year. In the past year, have you changed any of your own thoughts on the way the system is working? Not my thoughts. What I've changed is um, how I try to deliver those thoughts in the community. I have two older sisters than me. I was the baby of the family. So really, I grew up with like three mothers. And my sister, Tanya, was talking to me a few months ago. And we have a good relationship, and our whole family's close. And she said, Sean, sometimes you take what you know for granted, and I don't understand, and you need to help me understand. And so I realized then that, what's common knowledge for some of us, especially if we love finances and business, is we can assume that everybody understands or has the same level of competency. And so the mistake I can make sometimes is assuming that people understand. And I'm trying to do everything I can to adjust to how folks learn and understand the system. So even in our membership Discord, I've really tried to create a system to where you can join our membership Discord and have a community of folks you're learning with, and I'm involved there as well. And then I put together a paycheck to portfolio. We call it P2P training academy, so you can learn and become competent. There's an AI agent in there. There's a game you can play with other people. You can track and trend your own portfolio with tools, but it has step-by-step structured learning in there. And then over the last year, I created, with some help from the community, a lot of help with brilliant people, Paycheck to Portfolio web application. I call it the virtual cockpit, which is like being in the seat of the airplane with the controls and seeing your live brokerage integration. That's live with E-Trade right now. Fidelity goes live Monday. And then followed by that's going to be Schwab and Robinhood, which kind of answers the next question that Brad has, is Robinhood's about 2 to 3 weeks away. So we've made a lot of these tools because the community has needed those tools, asked for those tools. And it's a way I can tangibly take some of my knowledge base and make it something that you can touch, feel, and use, which will obviously help on the competency curve and growth. And really, I made it for my sister in the first place to help her because she was the one kind of feeding me these ideas. And then, of course, the community as well. Creedy mentions I've been doing this for almost 4 months now and wasn't expecting it to grow the way that it has. It's eye opening how fast things can build. Absolutely true. And I would even take it a step further. I don't think we realize how much money falls through the cracks of our hands with consumption. And when you start fully investing that amount of money, you still own something. That's how quickly it compounds and grows because that money was being consumed otherwise down to zero. Now it's fully invested and you own something. Brad, hopefully you picked up the question I just answered. Robinhood on the P2P web application, virtual cockpit, is about 2 to 3 weeks down the road, but we'll be there soon. And then this is a snip on one of our membership Discord questions and comments that I wanted to answer live because it hopefully it helps everybody learn. So Ride Till the End is a member that's been with me a while and very engaged and a Fidelity member if I remember correctly. But he says been pretty incredible to see my account grow so quickly. This is as of this morning at 7:06. I would have never implemented this strategy if I didn't stumble upon Paycheck the Portfolio YouTube videos that makes it easy to implement. I appreciate that. Only about 5 months in and 3 solid months of fully living out of the brokerage account. Incredible. And then he asked a question about the web app. So he's got some screenshots here of the web application. He's got his gross net portfolio value, the margin he's using, the equity percentage. Let me see if I can make this a little bit bigger just so you can see it because this is a snippet, obviously. And then you can see expenses, margin costs, contributions. He's got his dividends in here. One question he specifically asked about was this margin bridge screen. And I want to kind of explain this because I spent a lot of time thinking about this with my business background. Every month, you're going to get your assets minus your liabilities equals your net equity and your equity percentage. And what this equity change bridge shows you is what was your account value at the opening of the month. Each one of these segments you can actually click on and it will open up a drawer which shows you specifics. So it will show you your contributions, your net operating income, any realized profits, what the market has done, and then it will show you your closing. So basically, it's layering in each step of accounting for you so you can see how your portfolio actually adjusted and what your opening and close was. And then it gives you the net equity trend line so you can see is the system working for you. If your gross portfolio value is growing and your net portfolio value is growing, then your business is growing just like a business balance sheet. This comes from my brain of business and private equity world and looking at balance sheets most of my life. So what you're getting here is hopefully an easy to look at and easy to understand balance sheet view of how healthy your business is performing. And the longer your account's connected, this net equity trend line will keep growing month over month, year over year. I hope that answers your question because that's what you had asked here. Just a question on the web integration. What does equity change bridge supposed to convey? So let me know if you have any more questions on that. I know we were talking earlier and I asked if I could show this in the video, so I appreciate that. Looking at my resources which are available to you, you can set up white glove coaching and mentorship with me. That's one-on-one coaching and mentorship. If you want to go through your specific setup and sit with me and we'll customize it to your situation. You can book a one-on-one strategy call with me. That's a 30-minute high-level call if you want to learn more about the system. You can join our private Discord and membership, which gives you access to the community, access to all of our tools, and to the web application integration, which I just showed over here. And then you can download the free starter kit and simple spreadsheet if you want to see how your own finances might be impacted. Please like and subscribe. Hope you have a great weekend, and thank you so much.